Good day, everyone. Hope you guys are having an amazing time today. Bringing this snippet to you from ASL. And today I'm going to be showing you guys how to match time and price to sustain a profitable equity curve in your portfolio management of whatever digital asset classes you are holding. Or specifically, I'm going to be emphasizing crypto assets, especially the Bitcoin. We've come to understand that a lot of people just randomly just buy BTC and sell BTC. When they hear a rumor, BTC is rising in price, BTC is rallying, rush and go and buy. Then when BTC begins to fall or decline in value, they will rush and sell. It's not their fault. I want you to understand that this industry is rigged against the common man with more knowledge. So today, I'm going to be showing you something so important. I want you to understand that at ASF, our concept of looking at the market is time and price-based approach. It's simple. Okay, let's go there. From what you can see on my screen, you see that there's this saying here, a very funny one. Sell in me and go away. By Andre Dragosh. And I'll explain what that means. You see, this illustration that you're seeing here, it's called BTC seasonality. I want you to understand that the way we analyze the markets, it's simply summed around 4 confluences. Number 1, seasonality. Number 2, we want to plan the higher time frame key level, whereby we mark levels on our charts using classical support and resistance level, which will be emphasizing the time. So number 3, we want to know the manipulation times that things are happening in the market. Then number 4, we want to take our entry above or below the true opening price of that particular digital asset class that we are interested in. So you will agree with me that from this illustration you're seeing here, there are 2 major factors here. The outperformance of Bitcoin and the timing. But in this context, it is span around 12 months that makes up a year. But I want you to understand that the bigger boys, the BFIs, we call them the BFIs, the bank and financial institution that move and manipulate this industry, all right, usually leaves a footprint of what they will do. So your ability as a retail trader, because you and I are retail traders, to read these footprints is what gives you an edge to be profitable in this industry. So what they do is that they don't see the year the way we see it. They see the year in quarters. That means they divide the year into 4 quarters. Each quarter has 3 months. So 4 quarters in a year. Those 4 quarters, Q1, Q2, Q3, Q4. So there are specific quarters where we expect BTC to perform well. There are some quarters we expect BTC to decline. There are some quarters we expect BTC to just rally as if nothing is happening. And from what you can see here, you agree with me that this data you're seeing is over a decade. So you can see this month of November. For over a decade, the month of November usually has the highest performing months in the crypto space, probabilistically. While September is usually something else. All right. So, having said that, this now is seasonality, making you to know the time that this asset, BTC, performs. Like now, we've had almost the we're in the second quarter of the year, almost rounding it off, though, and we're already having some decline in BTC. So what we see there is a short-term bearish move, and it has started. All right, it has started, and having this ideology of time in mind, the next thing I'm going to do is to go to our chart. Haven't seen this whole thing here. In the future, we'll emphasize more on it. Now, this is the BTC chart. And we don't trade these crypto assets on smaller time frames because the institutions that moves this market don't do these small time frames that most people do. Trading BTC in 1 minute. I'm not saying it's bad. If that makes you profitable, then stick to it. But in ASF, we don't look at these asset classes from the retail perspective, smaller time frame. No, we look at them from the higher time frame, the monthly, the weekly, the yearly. That's how we look at it. The least level, even in the short-term trade, the least level we look at these digital classes from, the least time is the daily level. All right, it's the daily level. So from what I have here, plan the trade and trade the plan like a robot. Seasonality. Now we know around the time of the year we are in, first of all, BTC already took this external range high, external range liquidity. BTC took it already. That was around 69K, the 69K, yes, 69K. It's already took that. So it's common principle in the way we treat price that price will move for two reasons. One is to seek liquidity and take it. Liquidity can be in form of highs, lows, and inefficiencies. So price moves for two reasons: take liquidity and rebalance. Rebalance means price coming into internal range liquidity. We have a video that I already explained liquidity on the Telegram group. Then price push up again to take either external liquidity again high, or if it has to go down further, that means there might have been, after price trying to move from this internal range liquidity, there may also be an internal range liquidity that has been created here. Price can do this, they come for this external range liquidity. So these are just the two ways that price moves in the market. All right, so having said that, look at BTC now. So we already know what price was doing since the beginning of this year. Look at it from here since January this year. Some of us who has knowledge of time and price know that, okay, from where BTC is now, which is the significant higher time frame price level, if we go look at it, let's take out of this my line demarcation beginning of the year. Let me make it clearer so that everybody can see what we're doing here. Good. See this line, So if we switch to the line chart, we have this level here. That's a monthly level. We have that level there. Let me take away this now. Do you think it was by mistake? Because if this is a monthly candle, all right, so, and it's a bullish candle, all right, like the previous candle before January was a bullish candle. So because it's a bullish candle, the next monthly candle is going to open at the close of the previous candle, and the previous candle is a bullish candle, and bullish candle will close above. Don't worry, we're going to explain to you guys the anatomy of the candlesticks. Makes it very easy for you guys. All right, so you think it was not a mistake that price came into this level, all right, and bounced? None of that is a mistake. We know, we are aware, because price has pushed from this external high, this external range high, having taken this to come seek liquidity. Actually, there are two reasons price will move: seek liquidity to take them and rebalance. So price, I will take this. Price came to take this, If I should go into 6 months time frame, you'll be so amazed with what you'll be seeing. Look at this. You see this? You see this here? The price takes external range high here. What did price do? Price came into this internal range liquidity. Internal range liquidity is always fair value gap, balanced price range. Talk about those things when we are dealing on price, all right? Then what do we expect? When this is done, then we have this particular candlestick breaking this classical support and resistance level. When I talk about classical support and resistance level, I'm talking about the closing of candlesticks. We'll explain that in details. So we know that, it's time for the bullish move. Our price pulled again. Let's go back to the monthly. See, I'm not even looking at the 15 minutes, looking at the 1 hour. No. I don't have to. It's when we want to execute our trade. That's what we'll be considering, giving consideration to such time frame. All right. So because we already know that in the month of January, February, into March, BTC usually gathers momentum to rally from what we are having here. You seeing it? So we know that, BTC should rally because timing is already telling us this is the price behavior of this asset class within this season. All right. And the most interesting part of this is when we start delving more into timing, you will know when not to trade and when to trade. You will know around which quarters do the BFIs, the bank and financial institutions, do their manipulation. Around which time do they distribute price? Around which time do they accumulate price? Around which time do they manipulate price? We'll show you guys that. But this is just a snippet for you to know that when you understand time in terms of seasonality, knowing BTC performances around some specific times, coming into your chart to mark relevant higher time frame key level for store seasonality. That was done. This site is a public site, so anybody can visit it. It's not a pay, you don't have to pay anything. So marking relevant higher time frame key level, as I said, like for example, key level was already now, price currently rejected from a key level from a classical monthly support and resistance key level here. All right. Because why? Price took the external high. So it's only logical for price to come back into internal range liquidity. This trade, I caught this buy. This buy. Because price took this external range high, came back into internal range liquidity, not to pull again. So we know that we are going to experience some pullback because this is a monthly. With the way we trade price from levels to level, from key level to key level, monthly to monthly, weekly to weekly, daily to daily. If you're the type you're trading Forex or crypto, you'll be looking at 4 hour to 4 hour level, 1 hour to 1 hour level. And in between these key levels, there are roadblocks. For example, if price is moving from a monthly key level, key region, for example, price moved from this monthly internal range liquidity, which is inefficiency, right? Monthly LVG, monthly LVG. So it's only common sense that every roadblock that will be encountered on the way to cause some significant level of retracement will be the weekly key levels. Think about the weekly key levels. Go to the weekly time frame. Look at it. For example, this was a weekly key level. Here is a weekly key level. Here, we think it was a mistake. Here, I think it was a mistake that price got to this weekly key level and made some significant rejection to sell off. No, it wasn't a mistake. We are aware. And in this weekly key level, if we go to the daily, you may see significant inefficiencies or other significant price level in that region. Look at it. You think it's a mistake the price has a significance daily inefficiency? No, it's not. It's not. It's not. It's not. But don't worry. As time goes on, you get to understand fully how we use time to predict price, because time is the cost and price is the effect. Thanks for your time. Look out for more snippets from ASF, and don't forget to follow all our social media handle. Stay blessed. Have a nice day. Bye-bye.